India is one of the world's most important economies. They are bound to surpass the United States in the coming decades and would be on par with China due to their massive economic potential. And even if we don't discuss its future potential, India has already emerged to become an important global economy. The country is a massive IT outsourcing hub. They are a leader in exports with some industries like pharmaceuticals and are an important source of the world's food through agriculture exports. With all these, many wonder about the economic size of India today. Just how much do they export to the world? What are their leading exports? What are the main industries that drive the entire country, and so on? So, let's understand all of these. Let's first start with the most known economic concept, which is gross domestic product, GDP. GDP is simple to understand. It is the measure of the total value of all goods and services produced within a country in a specific period, usually a year. It is one of the key indicators of economic performance. Here's a graph on India's nominal GDP, data from the World Bank. Here you can see that over the years, India's nominal GDP has grown rapidly, surpassing many major economies. But if we were to rank the largest nominal GDP by country today, India would still be far below major economies like China and the United States. But there is an indicator where India is actually the third largest economy when measured using this indicator, and that is the GDP purchasing power parity, PPP, which, unlike nominal GDP, this data accounts for the differences in price levels between countries, making it a more accurate measure of economic size in terms of real purchasing power. Here you can see that India has a GDP PPP for 2023 of over $14.6 trillion, which may still be far from China and the United States, but it is far above the countries that we saw earlier, like Japan and Germany. Beyond this understanding of India's total economic output, another important indicator to see about the country is when we divide the total economic output by the population. This gives us the GDP per capita. GDP per capita is a useful measure to understand the average economic well-being of individuals within a country. It helps to compare the living standards between different nations, as a large total GDP does not necessarily mean that the wealth is evenly distributed among citizens. Here's a graph comparing India's economic output per capita to these major economies. Here you can see that unlike nominal and purchasing power parity, India still lags behind in this criteria. That is because India has a massive population, which means that even though the country's total economic output is large, it is divided among a vast number of people. This naturally results in a lower GDP per capita compared to countries with smaller populations but high economic output, such as the United States, Japan, and Germany. Now that we have an understanding of India's economic output, let us understand the contributors to India's economy. These, as some people would already know, are usually through three sectors: agriculture, industry, and manufacturing, and services. Let's first start with agriculture. Agriculture is an important industry for India today due to its massive contribution to employment, food security, and exports. While India has rapidly industrialized and expanded its IT and services sectors, agriculture remains a backbone of the economy. Here's a graph on the agriculture, forestry, and fishing value added as a percentage of GDP, data from the World Bank. Here you can see that the agriculture's industry has gone down in contribution to the GDP. That is a given because India has been experiencing rapid industrialization and a shift towards a service-based economy. As economies develop, their dependence on agriculture for GDP contribution typically declines while manufacturing and services sectors expand. This transition is a natural part of economic evolution, seen previously in developed nations like the United States, Japan, and Germany. However, what you should know is that the overall industry is still growing. Here's a graph for this matter, but instead it showcases the value added in current US dollars. Here, you can see that this industry has continued to grow significantly, contributing over $570 billion to India's economy. On top of that, agriculture is also a big contributor to the overall employment of India. Here, as you can see in the new graph, agriculture still provides over 44% of the total employment of India, which goes to show just how important this industry is. Secondly, another key contributor is industry and manufacturing. The industry and manufacturing sector includes manufacturing, mining, and construction, which is an important indicator because it showcases India's ability to produce goods, build infrastructure, and drive exports. As India moves towards becoming a global manufacturing hub, industries like automobiles, electronics, pharmaceuticals, steel, and construction are shaping its economic growth. But if we take a look at the graph, we actually get to see that India's industry contribution to GDP has actually shrunk as compared to the previous decades. Here, you can see that the industry's contribution is even lower when compared to the 1980s. But how can this be? Shouldn't manufacturing be an important part of India's economy? Well, the thing about manufacturing is that it didn't really prosper significantly in India. What did, however, is the service sector. Here's a graph for that matter. Here you can see that the service sector has continued to grow, which as of 2023 is over 49.6%. That's nearly half of the Indian economy's total economic output. But what is the service sector? Well, it includes a broad range of activities from IT and software services to retail, finance, healthcare, and education. The size of this industry also showcases India's role as a global hub for information technology and business process outsourcing. Companies like Tata Consultancy Services and Infosys are leaders in the global IT services market. Let's even graph out the world's largest IT service provider by market capitalization. Here, you can see that the companies on the list are a mix of American, Indian, and Japanese companies. But most of these companies, as we will highlight, are actually Indian companies, with TCS leading the entire world with a market cap of over $157 billion. Now, let's move on from the sector contributions and talk about foreign investments and exports. These two are integral parts of understanding the size of India's economy because they showcase India's integration into the global market, its trade competitiveness, and its ability to attract capital for economic expansion. Here's a graph on the foreign direct investment, FDI, net inflows of India, data from the World Bank. Here you can see that over the years, India's FDI has rapidly risen. It reached a peak of over $64.36 billion in net inflows in the year 2020, which is a significant figure. Since then, however, India's FDI net inflows has been contracting in growth. That might be because of the current global economic environment of high interest rates, which has made capital more expensive, leading to a slowdown in global investments, including FDI into India. But just where are these investments going? Well, let's take a look at some of the largest in recent years. When discussing this by sector, the highest FDI equity inflows was no other than India's service sector, amounting to over $115.18 billion, followed by the computer software and hardware industry at $107.07 billion, and then telecommunications of over $39.4 billion. The largest investors, on the other hand, surprisingly come from Mauritius, contributing $177.18 billion, and then Singapore, and as you can see in the list, is from other nations. But if we were to take a look at this by company or by project, we get to see another different thing. One of the largest foreign investments announced includes the likes of the Adani Group and Tower Semiconductor's $10 billion semiconductor plant, which is a joint venture to establish a semiconductor manufacturing plant in Maharashtra. There's also Microsoft's $3 billion investment in AI and cloud services. It was announced in recent months that Microsoft over 2 years would expand its Azure cloud and AI capabilities in India. There's also a $2.75 billion semiconductor plant in Gujarat, made by Micron Technology back in 2023. These are just amongst the projects, and there are more. For exports, let's pull up the total exports of goods and services of India. Here you can see that exports of India are massive, with the latest year available for 2023 showing over $779 billion. But just what are these exports? Well, let's take a look at the exports by category for 2023. Here you can see that a majority of India's exports is mineral fuels and oils, which is a given because its refining industry is one of the largest in the world, re-exporting processed petroleum products to various countries. Following closely is precious stones, jewelry and metals, with India being a global leader in diamond cutting and gold jewelry exports. Then thirdly, as you can see, is due to the electrical and electronic equipment, also contributing significantly. But other than goods, India also exports services. Their service export is massive, and as you can see, their total exports is over $337 billion for the latest year available. But industry-wise, it's still dominated by no other than software services. Here, you can see that software services accounts for over 49%, followed by business service at 23%, and then all others are divided by smaller sectors. So, just how big is India's economy? Well, it is indeed big, and it is bound to grow further into the future. But anyway, do let us know what you think. Thanks for watching.